Welcome to the I Own It podcast with Ben Reinberg.
We're live today. We are outside our Laguna Beach studios in California. We are in Austin, Texas, which is a very special place to me because my company, Alliance Consolidated, we do a tremendous amount of business in Austin, Texas. So this is a second home to me. So I'm really excited about today's guest. On the I Own It show, we have an entrepreneur, a mentor, a coach, an investor, an educator, and a soon-to-be author. Kenney Conwell, thank you very much for joining us.
Absolutely.
It's exciting to have you here in Austin, Texas with us. And let's just get right into it.
It's fine.
So your company, MyMoney EDU, focuses on financial education.
Yep.
And it's something that's in great need in our country, and including improving credit, savings, buying a car, a house. Can you share more about your members?
Yeah, so the biggest thing, and thanks for having me.
Absolutely.
Super grateful to be able to do this show with you, and hopefully we can impact some lives. But yeah, I mean, what we teach people how to do is really how to fix, build, and leverage their credit, right? So that way they can leverage their credit to become first-generation millionaires. So a lot of people who look like me, and probably in America specifically, just didn't get the education, especially going through school, about money and how it works. And then you're just kind of launched into life, and you got to figure this thing called a bank account and credit card. And next thing you know, a couple of years down the road, you really need to know how to use it, and you need to use it, but you can't because you mess it up. So what we really do is focus on helping our current community members understand, okay, you're either in the fixed stage because you've got negatives, you're in the build stage, which means you don't have any credit, or you're in the leverage stage, so you can start to leverage your credit in order to build wealth.
So what kind of backgrounds do you see a lot of your members come from, and what educational insights do they not have that you're able to help them with?
Ironically, we have people from all walks of life. The single mom that's with kids, who's got one income, to the guy doing 7, even 8 figures that doesn't even understand how credit works. But the common theme I have heard and seen is just the lack of education on how money and credit works, and then how they can really deploy it. So if you're a 7-figure guy coming to me, you are all cash, right? And you're not even understanding how you can even tap into, grow, and scale your company using business credit or credit in general. Or if you're like that single mom or father who doesn't, they're just trying to do the American dream. But the majority of them, the theme is they just don't understand how the credit system works and how money works and how they can leverage it. Because I think credit is bad. They think debt is bad. And I kind of break them through to say, no, debt is good. If you understand structured debt, which I know you know all about, you get an asset based off of debt, the asset can pay for the debt, and you can continue to build wealth. And that's really like the theme, is helping them understand how to leverage credit and debt strategically.
So in your view, why do so many people in our society have a limited financial acumen?
I mean, one could say it's because it's the way the system is set up, I honestly think it's just lack of education. Most people, we're not historically taught to become entrepreneurs, to become investors. We taught to go work for somebody or work a job and do that, and you're also taught that debt is bad. So I think it just honestly has to do with just like the education personally. But then once you start to really understand, and this is something I realized when I started making a little bit of money, that the IRS tax system is actually, it incentivizes a certain group of people and it decentivizes the other ones. That being said, when you look at, as an investor and a business owner, we don't really have, the tax system is actually set up for us to win. So when you look at that with debt and credit, and then how all this stuff works, you really start to say, oh, okay, I see how this game is being played. But many people, they're not even getting they're in the game. They don't know that they're in the game. They don't even have the rules of the game.
So do you have any strong ideas how this could be improved, and just a few suggestions that you could pull from, like whether you teach it in high school, we have regulation to require lenders to offer education. Like, what would be some ideas to understand how to deal with your credit?
So on one front, it's like this, right? The lenders, do they really want to teach people how this works, right? They're in the business of loaning money, right? And the more, because if they loan the money, they can make the money, they can package it up, sell it to some Wall Street firm, and then they make more money on the money, right? So it's not really, I'm not saying that they don't have an interest in doing that, but it's almost like even in school, what are we teaching our society to do? What are we teaching our society to be, right? And the majority of our society isn't taught to be an entrepreneur. We're not taught to be business owners. We're not taught to be investors. We're really kind of taught to work for someone. So I think once you start to realize that even if you do work for somebody, which is nothing wrong with this, is you probably need to keep your 9 to 5, you want to really start to figure out, okay, how can I, if I have the desire to become a first generation millionaire, and then make sure the next generation is good, I've got to understand how money works. So I think it's important to start when you have kids, start breaking down, okay, this is how a credit card works, this is how cash flow works, this is how a budget works, right? This is a nasty word. Lots of people I don't want to budget my money, but you want to make sure you have a clear cash flow and handle on that, so that way you can know that, hey, look, if you do or want to leverage credit, it's not free money. However, it's money that can be leveraged to make more money. So even as simple as knowing the difference between assets and liabilities. I didn't learn that in school, right? I learned that in accounting when I was in college. But I didn't know, okay, well, if I can take money, number one, if I didn't get an inheritance, then I can create money if I have a good personal credit score and if I have a good job. AKA, I can reinvest either in myself or I can invest in this asset. So although I'm going into debt, this asset technically can pay off the debt and help me build my net worth. So I think starting or educating people in school would be helpful, but even if you don't get it, you can get around like podcasts like this and start to get in the room and start to understand how this stuff works, because now all it is, and I've said this multiple times, all money and credit does is amplify. Nothing more, nothing less. So if you're mismanaging your money at a low level, you're going to mismanage your money at a high level, but it doesn't mean that making more money is going to solve the issue. The issue is this.
Right.
We've got to get the blueprint, we've got to get the mentorship, we've got to get the understanding of how it all works.
Let's talk about a little strategy, because I've seen some of your clients and the testimonials, which are amazing. So say someone went to a score in the 500s and they want to get to the 700s, and I've seen you be able to do it in a short period of time, like less 60 days, you've been able to bump them into the 700s.
Yeah.
What are you doing for them that creates the ability to jump 200 points? Because that's a lot. I get my credit pulled a lot being in commercial real estate. So for example, it dropped 22 points the other day. I have no idea why. Nothing's been pulled, just happens. Walk me through, when someone's at 500, what are you doing to get them up to a 700 FICO score, or 750, or whatever is the target you're looking for?
Yeah, we can get real specific on the personal credit side, because we got personal credit, we have business credit, but on the personal credit side, it's a system, right? All system means is save you some time, energy, and money. So we've devised a system so that way you can understand how credit works. So to keep it really simple, I'm trying to see if I can do this in less than 1 minute. Your scores range between 300 at the lowest, 850 at the highest, right? So what does this mean? This means that you and I have 550 points available. So there's 5 categories of credit, right? The first one is payment history. So that's accounting for 35% of your score, AKA 192.5 points, right? That's the biggest one that we have most control over.
Right.
The second category of credit is utilization, right? That accounts for roughly 30% or 160 points. The next category of credit is credit mix, which has to do with the mix of accounts that you have, and that accounts for 10% or 55 points. So just right there, I'm going to break this down. If you take the 192 plus the 160 plus the 55, that gives you roughly about 312 points, something like that. 412 points, 412 points. So 412 plus 300 is a
700. What is utilization, though?
Utilization that's a great question. Utilization has to do with how you use your credit cards.
Okay.
So to go a little bit more detail about that, if you have $10,000 in revolving credit and you're using, let's just say, it's reporting to the bureau that you're using 9,000 of the 10,000, that means you're using 90% of all the points available in that category. So it doesn't take a rocket scientist to say, well, if I only have 160 points in this category of credit and I'm using all 90%, that means my credit score is going to be lowered. So all utilization has to do with how you're using your credit card. So you want to keep your utilization between 1 to 7%. Reporting. It doesn't mean that you don't use it. It just means that by the time it reports to the credit bureau, it's between 1 and 7% because you're maximizing all the points in that category.
So is it better to have a lower balance? Is that where you're going with this?
It's better to allow the balance to report lower.
Okay,
right?
got it.
So, I mean, it doesn't mean you don't use your credit because you can get points and all this stuff, but just make sure it's paid down by, here's a really good tip for you guys, the reporting date.
Yes, that's what I was going to ask you. When is the reporting date?
It depends on the credit because you've got the statement date,
Okay.
then you've got the reporting date,
Okay.
then you have the due date.
Okay,
Right? Because the due date can be on the 27th.
right.
The statement date can be on the 29th, and the reporting date can be on the 25th. So what's happening? If I'm keeping a $10,000 or $9,000 balance, but the reporting date's on the 25th, before the due and statement date, guess what's going to happen? I'm going to always look like I have this high utilization because those dates are after the date it reports. So simple hack, make sure the reporting date is after the due date or payment date, so that way you can always make sure you can use your credit and pay it and not have that high utilization. Does that make sense?
Yeah, that's a great point. Do you recommend to everyone out there that you call your credit card companies and ask them and say, what is
Yes.
my reporting date?
Yes.
And can I move it past my due date of, say, if it's the 15th or the 20th or whatever?
Yep.
it be?
Yep.
That's an outstanding point.
Yep.
I've never heard that before.
Yeah.
Go to your third point after utilization.
Credit mix. So credit mix, again, what I'm breaking down is our controllables, right? What we can control.
Mm-hmm.
And I'm going to get into the weeds of the biggest one, which is the 192.5 points. So credit mix just basically means you want to have 5 revolving accounts, AKA credit cards, and you want to have 3 installment accounts, AKA like a loan,
Auto loan.
home loan. You can even go to like a credit card. You can go to like, I think it's called Credit Strong or Self Lender and not even necessarily take out a loan, but it reports as installment credit.
Okay.
And the reason why is because that's what FICO defines as a perfect credit mix, or at least the beginning of a credit mix. So in order to have those 5 revolving 3 installment, that's like the foundation. So now what happened? I have 55 points because that's the credit mix. I have, assuming I'm paying my credit cards down, low utilization, that's 160. And then if I have all negatives removed, which we'll get into now, that's 192.5 points, right? So at that point, I have a mathematical 700 credit score,
Okay.
right? But that's how we want to manage it. And then we can grow from there. But those
Right.
are the big ones. You've got inquiries and you have length of credit, which are the other 2.
Right.
But inquiries and length of credit are those things that we kind of control, but length of credit we don't. We just kind of open up the accounts and let it kind of just ride. So there's nothing we can do to really enhance that outside of just pay your bills on time. And inquiries just has to do with you, or new credit just has to do with you applying for credit strategically.
Right. Or if you have existing loans like I do. where
Correct.
They pull it. So as a CEO and as a parent, I've seen my life just how differently people learn the best. And I often see articles about different research on this also. How do you approach education for MyMoney EDU?
This is a good one. So the way I put it to you is this. So if I poured this water in that glass, but it was dirty, would you drink the water from that glass?
Well, you're talking to Ben Reinberg. I usually will do anything. But generally speaking, most people would be no.
Okay. So think of your credit report as the glass.
Okay.
And the water is the money at the banks.
Okay.
So step 1, in the education is we have to help people understand that they need to clean their glass.
I got it.
So from an education standpoint, what I'm doing is I'm helping people understand and relate to real life examples that they can be like, oh, that makes sense. No wonder when I go apply at the bank to get money, they're like, no, because your glass is dirty. And even if you do get water poured in that dirty glass, guess what? Higher interest rate, higher fees. Who wins in that scenario? Them, not you.
Exactly.
So the education standpoint, number one is the proven process, AKA we already have a proven process that 36,000 people went through before you joined that says this is what success looks like. Then number two is the education. So how do we now start to reprogram our thought process about credit and money, right? Once we've done that, now we have the community. What I've found is it's not just about what I'm saying. What about the other members who are going through the same exact process like you? Let's get you plugged into that community. And then it's the coaching.
Okay.
So now we provide the ongoing coaching, whether you're in our personal credit program or a business credit program. So when you have questions, because you will, you can tap into that particular stuff. So it's all four of those. Proven process, education, coaching, and then the community is how we really help our members get results.
Oh, that's fantastic. Are there things that you've learned over time that are more or less effective when you teach others?
I mean, most people learn from my experience from doing, and I think I can go really deep with this, but I think it's all about who are you listening to, right? So you're successful commercial real estate investor. You've been doing it close to 30 years at this point. If I want to get in commercial real estate, it behooves me to listen to you because you've actually gone from no commercial real estate to having a lot of commercial real estate. So although I could go and want to get a book or learn from someone that said, oh yeah, I do commercial real estate, you may not even have the experience to teach me what's necessary. So I'm saying it to say, it's like, who are you listening to? It doesn't mean that if I have bad credit or bad finances that I can't go, well, think of it this way. If I inherited $1 million or $2 million in great credit, I couldn't relate with somebody or I couldn't communicate to the person who's never had bad credit or is coming from nothing.
Right.
So although I already have the ideal result, you want to listen to people who have been where you are and have what you want because they can explain it in a way that's tangible and actionable to you. And I think that has a lot to do with the success and how people are able to get results with me and with anybody, right? Because again, I'm listening to somebody who actually had bad credit. Right, as a financial planner, go figure. How does that happen?
Right,
entrepreneur, right? So, I think that's a lot. I think that has a lot to do with it.
So, before starting MyMoney EDU, I believe you were more of a traditional financial advisor. Is that right? And can you share more about your career journey and what inspired you to start MyMoney EDU?
Yeah. So, in 2007. That's when I got started in the financial services industry. I was still in college, right? And fast forward, I went and joined this one company called Primerica, and that's when I started learning about like the whole financial services industry, entrepreneurship, et cetera. Then I realized that you can become a broker. Make a long story short, by the time I graduated from college, I didn't want to get a job, right? I wanted to do my own thing in the financial services industry. The reason why I even got started in Primerica is because as a college student, I don't know if you got refund checks when you were going through school,
yep.
But I got a refund check and I was blowing the money, right? I was just blowing
You're like, it's free money.
It's free
I'll
money.
take it.
Not knowing that I got to pay this back, right? So I'm blowing the money. And this guy talks about finances, and that's what got me into this whole financial services industry. I went and interned with them. So fast forward, by the time I graduated from A&T, I didn't want to or have to get the traditional job, and that's kind of like how I learned about it. But the thing is, being a college student, they didn't have money to do investments, and they didn't have money to do insurance or any of this stuff. So I had to learn how to market. Right, so that's when I started like really learning personal development, marketing, et cetera, et cetera, et cetera. So fast forward, I went to, I moved down to Charlotte, North Carolina, and I joined a company where you're in business for yourself, not by yourself. But then that's when I really started learning the ropes of like trust and insurance and financial planning and cash flow management. There was two key things I kept running into when I was speaking with consumers or even clients. They needed help with cash flow and they needed help with credit.
Okay.
But they always needed help with cash flow because even if they were making $100,000, $200,000, $300,000 a year, they always seemed to be confused about where cash went. So fast forward, at the time, I didn't get paid until I sold something. So I said, you know what? I think there needs to be a way where I can educate people on this process, right? So to give you like the long and the short of it, going into 2012, I wanted to make six figures, man. And it just seems so small now, but I remember going there, I wanted to make six figures. And as an entrepreneur, you don't realize the daily activities that you do that make you successful. And then you go chase the big deal. So I did that. And, going into about August 2012, this big deal that was supposed to make me $100,000 in one swoop didn't go through. I trashed my credit. I lost all my savings. I messed up other people's credit. And I had to go get a job. I hit rock bottom, right? And now, as an entrepreneur financial advisor, I realized two things. Number one, just don't ever put all your eggs in one thing and stop doing the daily activities that produce cash flow. But then now, number two, my car even went out for repossession. I'm like, man, I had trashed my own personal credit. So I had to get a job. And it was very humbling getting a sales job, but I built myself out of that and was able to, in 2013, get myself out of that bad situation. My credit was still bad. And I was still selling insurance part-time, doing my financial stuff. And along the way, I wanted to get my Series 65, and my credit kept on being an issue. And I'm still, mind you, helping people with their insurance, helping people with their retirement accounts, and my credit is still kind of jacked up. You know what I mean?
Sure.
So I started the journey. I said, you know what? Because everybody knows a credit guy that can fix your credit. I said, you know what? Let me learn this. And I started, and then in 13 months, I'd improved my credit score 224 points. And at the time, I wanted to get out of just the 101 selling and meeting with clients and put together a system. So, let me put this out on YouTube. And the video goes viral. And all these other people needed help with their credit. And mind you, earlier this year, I was attempting to, this year when I was doing, this is like 2016, I was attempting to help people with budgeting, but nobody wanted to do budgeting. So I discovered something. You've got to be able to, as an entrepreneur, offer a pain pill, a solution that's going to solve somebody's pain, then give them the vitamins.
That's right.
Budgeting is vitamins. Credit is a pain pill. And that's when I learned that, hey, look, people could benefit from just education. And this is in 2016. 2017, we got 5,000 clients. 2016, I think it was 5,000. 2017, I think it was like 11,000. And we just kept on growing. And then people would say, well, can you teach me about, you taught me how to get the negatives removed. What about building credit? What about cash flow? What about entities? What about business credit? What about leverage? And we just kind of just kept adding to it. And at this point, we got about 36,000 customers, close to 4 million points improved, about 2,000 or so new homes. I don't know how many new cars, a lot of new cars, a lot of lines of credit, lots of business credit. But it all started from that. Right.
So it's became more of a scalable tech company compared to a typical financial advisor role.
Yes. So now I don't even really meet with clients. And I created a separate company for financial planning, but MyMoney EDU is simply an educational system. It's an educational platform.
So you're able to reach people who can't afford high-touch services, which is really a benefit to using the internet.
Yep.
What's your vision for MyMoney EDU in 5, 10, 15 years? Like, what are you aspiring to become, and where do you see it now on that journey?
One of my mentors told me, and I heard this recently, that the business is the product. So now I've set my sights to be able to set MyMoney EDU to sell. So, but also along this journey, I would say, I really can't say in the next 5 years, even 10 years, I've got my head set on the next 3 years. So many entrepreneurs who are in my space have reached out to me and asked me, can I show them what I've done? So my 2029 target still is 1 million people, 700 credit score, right? And about 12 months ago, I said, well, maybe I can build MyMoney EDU up to hit 1 million people, right? But then I've realized that I can still do that, but instead of it just being MyMoney EDU, what if we were to co-brand and license and white label what we have going on to help the other credit entrepreneur? Because what I've realized becoming a first generation millionaire, and I'm sure you've realized this as well, you can save and invest your way, but the better way is to have an entrepreneurship endeavor and reinvest in actual assets. The best way to help somebody become a first generation millionaire is give them the opportunity to create some significant income for themselves.
Yeah, teach them how to fish, and that way they can survive and feed themselves.
Yep, teach them how to fish. So now what we're at a place of, I said, well, the goal would be now, instead of us acquiring, which would be a lot of customers in a month, what if we just empowered 10 entrepreneurs, or even 100, let's just say 10 entrepreneurs on how they can acquire 2,000 customers per year,
Okay.
right? And then I said, you know what, I don't think 10's enough. What if we empowered 100 entrepreneurs to acquire 2,000 customers per year? Because we've done this. Well, we'd hit our goal if they're following our same blueprint of 1 million customers by 2029, but I'm now, instead of it just being dependent upon me, we still get the same impact. I'm now impacting these 100 entrepreneurs, not only helping them make a bigger impact in the lives of the customers that they're serving, but I'm also making an impact in their lives and helping them become first generation millionaires. So that's the goal right now.
So you highlight mentorship and coaching in a lot of your content that I've seen.
Mm-hmm.
Share more on some of your mentors/coaches, and what are some powerful insights that they've taught you professionally, and how do you approach mentorship and coaching for those on your team and who you cross paths with?
I think it's important to almost like what we were just talking about before, is to find somebody who's been where you are and has done or is at where you would like to be, right? And instead of trying to figure it out on your own, because I've done this, don't be afraid to invest, right? So if they say, hey, look, and they have a proven track record, and it's 10,000, 5,000, 500, invest in that, because the best investment is always yourself.
That's right.
I heard somebody say, instead of investing in the S&P 500, invest in the SME 500. You know what I mean?
I like that.
Invest in
I have to
me.
use that. That's great.
Because it makes sense.
It does.
You're getting a skill set. So I say that to say, from a coach, from a mentorship perspective, if you're watching this interview with us and you're at a place where your income is between 0 and 10K per month, and you have 10,000 in savings, and you're asking yourself, where should I invest? The answer is you. You need to invest in yourself, because you've got to be able to provide or create a skill set so that way you can know how to make money. But you may be that business owner who's said, you know what, I'm at about 500K or $1 million, and I'm working like a dog. Although this money is good, I'm working 60, 70 hours a week. Well, you've got to invest in people and systems. Right? You've got to invest in some good people, some good systems, so that way you can scale that business and create your cash flow. But you may say, you know what, Kenny, I've got that place where I can go out and command $10, $15, $20, $50,000 for a speech, and or my business is doing, 6, 7 figures, heck, even 8 figures. I'm trying to figure out how I can get my money to make me money. Then you want to invest in mentors that are going to show you how you can invest and make money on money. So I say that to say it really depends on where you are, but the best strategy is figuring out, okay, am I in the high income skill set phase where I've got to make money? Am I in the scalable business phase where I'm producing cash flow? Or am I in the phase where my money is making me money? So if I'm going to leverage money from the bank, or leverage, I like to call it TBM, the bank's money, or leverage OPM, other people's money, other people's mind, other people's mentorships, how can I leverage that OPM to take me to the next level? Because again, if I'm going to go out and I'm going to say, hey, look, in that bottom triangle where money makes me money, I could say, you know what, I've got this extra cash. I don't want to use my own cash. I want to go get commercial real estate. How is this going to help me make more money? Right? Well, you can leverage somebody else's money. You can make more money. You can do this, et cetera. But I think it's a matter of figuring out where you are and then finding that mentor in that place. Invest in a deal that's going to make you, may not make sense to take 10,000 and invest in the OPM situation, because that 10,000 may give you 20%, it might make more sense to invest that $10,000 in yourself so you can learn the skill set. But you may be in scalable business phase, and it may not make sense to take that money in scalable business phase and invest in this asset because your business is the biggest asset. So I think it's just a matter of finding that out. But then once you've discovered that for yourself, you go find the appropriate mentor in that space.
So let me break this down to you. This might not be very popular to you out there, but you need to be vulnerable. When you're vulnerable and you can ask for help, look for mentors.
Agreed.
In my business, obviously, we raise money from investors. We bring in help and resources. You have to be vulnerable, and you have to be in the position where you look for help and seek help. And I agree with you. If you can invest it in yourself, spend some money that you saved into mentors or into masterminds to educate yourself. There's no better investment. It's the way that I've created success for the past 30 years. And I agree with you. I think it's so important. So it's a well said point, and I really appreciate that. You know, you've spoken about being an investor. Okay, what kind of asset classes are you focused on today, and what's your personal strategy for managing your own portfolio?
It's a good question. So I'm focused on three. The first one is just good old-fashioned entrepreneurship, my existing business and businesses. So reinvesting heavily back into those businesses. And you know, taking those to the next level. So entrepreneurship, my existing businesses. The second thing I've kind of tripped into, of course, I'm nowhere near where you are, but it's been real estate. You know, because I understand that there's this thing called financial leverage. So right now I've got 3 properties and looking to get some more, but you know, they're all single family properties. But I've started to realize that real estate is like amazing. You've got accelerated depreciation. You've got all these different. I don't even get all these different things that real estate can do. So real estate is another asset class. And the other one is this specific hedge funds. So earlier this year, I invested, and don't hit me up about this because it's kind of like a private thing, but I invested $100,000 of the bank's money into this particular hedge fund. It quadrupled. Right, I paid back the money, and that money is just kind of just still growing, right? And I'm probably gonna put more money into that, right? So that's the money making me money, but more so business, real estate, and real specific hedge funds that serve my interest.
Okay. So I noticed on your website you're looking for more sales leads, right? And you're focused on inbound sales. So, for example, giving high quality sales lists to reach out to. This is a part of Alliance, my company that I'm further expanding. We're investing a lot of money into it.
Okay.
I'm curious if you could share more about your approach to sales-driven growth.
Yeah, so I think right now, like we kind of talked about like what I'm doing with my accelerator program and teaching other entrepreneurs how to do that. But I think it's super important to understand or have a customer acquisition machine that allows you to market, sort, automate, serve your customer. But at the simplest terms, all right, who are you? What is their pain, and then how can you solve their pain with your process? So another one of my mentors was talking about, you know, creating like a customer value journey and having a value engine. So I think that goes into having that perspective. But I think once you understand, okay, this is my current circumstance, this is my desired circumstance. If you have, which we do, have a proven track record to get me from current to desired, my program can help them at. We now start to communicate a lot of this is where you desire to be, this is where you currently are, let us help you out. So on the marketing, on the front end, we're communicating that message. Another thing I started to do is helping people understand their current reality versus the reality that they want. So your broke self versus your rich self. And letting people figure out, okay, I'm not going to, what I tell you is propaganda, but what you tell yourself is Bible. So now helping people at a subconscious level start to figure out, man, I really want this, but this is where I'm at. But I can't tell you that. You got to be able to figure that out yourself. So letting our marketing do that, and then helping them understand what their new identity is going to be when they get the transformation. So I did this video and I was breaking down. I was like, hey, look, man, if you've got poor credit right now, don't worry. I've been there. I've been where you are. I know what that feels like. But where I want you to go is back here when you're in the 7s, the 800s, because you now can leverage. So it's now showing them that you have the ability to be there. You've just got this thing here in your mindset, or this thing, this roadblock that's preventing you from getting this. So let us help you with it, right? From an esoteric standpoint, but then we can start getting into funnels, then we can start getting into conversions, then we can start getting into sales scripts, we can get into, okay, close ratios, all that stuff. But I think sales is super important. And then I wish somebody would have taught me this when I first started out. Make sure you also have some type of recurring revenue program or subscription or something that your customers are going to need to use anyways.
That's right.
Right? So you would have thought that, all my customers in the credit niche need credit monitoring. Well, I wish I would have started a credit monitoring company from the start, because I have almost 36,000 people on my credit monitoring company,
right,
recurring. So I think it's also important to understand that and make sure you have that in your business.
Yeah, and business is a journey. I mean, you're going to fail, you're going to progress over time, and you could always morning quarterback the decisions you make. But if you didn't go through those challenges, you wouldn't be the Kenney Conwell you are today. Let's
something else I want to add on that.
Yeah.
Because I think it's super important to get this. You need to understand the lifetime value of a customer, and realize that customer service is super important.
That's right.
So even if you have someone who may have paid you on your lower ticket offer, treat them like a $1 million customer, because they have the ability to bring you more customers or do more business with you on your ascension ladder. So knowing that is super important, because sometimes it may cost you $300 to acquire a $200 customer, but if you know your lifetime value of that customer is $15,000, why wouldn't you do that? So it's really important to know that.
Well, it's a great point. You should be treating people the way you want to be treated. And we have the same thing with our investors. We might have an investor that invests a little bit amount of money, but he grows into a bigger investor as they, make more money in their career.
Yep.
Or they might refer us 5 new investors, and those mushroom into other investors too. So you just never know. You have to really treat people the way you want to be treated. And the name of this show is called I Own It. And the foundation of it is being responsible for all your actions and your decisions. Was there ever a moment in your career, and I know you went back and said you had some financial challenges, was there ever a moment that you could look back and say, I don't really own this. I don't know who I am. I'm struggling, trying to figure out life. What was that moment for you? Because we all go through
those moments, man. I think it was I mean, I had to own it, but it was when my car was out for repossession, and I couldn't pay my roommate his half of the rent.
Okay.
And in one moment, I was like, man, I can just keep trying to avoid this. But I had an epiphany moment. I said, you know what, Kenny? As humbling as this is, and this is like the dirty word to an entrepreneur, I gotta get a job. It was when I got to that point of rock bottom, where I was like, man, I got to get a job. I had to humble myself and realize that, it's totally cool. I'm going to take ownership, even if it means I have to do what I don't want to do as an entrepreneur to still provide for myself and get myself out of this hole. And that was like that shift. And before, you can blame this person, blame that person, blame this, blame that. When in all actuality, when you shift the blame and you just take, no pun intended, ownership of the situation, you now empower yourself and you start to project and open yourself up to more possibilities, because now it's not like, oh, it's somebody else's fault. No, it's my fault. Right? I tell entrepreneurs this all the time. This is kind of like complete segue, but your business is a reflection of you. If you have team members who you don't like in your company, it's not their fault. It's your fault. You either did a bad job hiring them, your fault, or you did a bad job training them, again, your fault. So we got to start to take that ownership. So now even if it looks bad, and you said something that was really powerful about vulnerability, being vulnerable about where you are, being transparent, because another thing I realized, there's no transformation without being transparent.
That's right.
Right? When you're transparent, that's when the transformation happens. But if I've got this ego and I'm not being vulnerable and I'm not taking ownership, I can't even be transparent about where I am. And if I'm not going to be transparent, I won't be able to get myself to the next level, right?
That's great. It's good stuff. Okay, so we're going to wrap up. We always, with our guests, wrap up with 3 questions, okay? Well, you're not in our studio with us in Laguna Beach. If you ever come out to Southern California, you have an open door policy to come over, and we could do an interview in our studios. It's got a great vibe. In our studios, we have a couch, and if you were laying down on the couch, how old are you?
36.
36, okay. So a 36-year-old Kenney Conwell, if you can go back 20 years and talk to yourself when you're 16, and you've learned a lot in 20 years, what advice would you share with yourself if you were talking to your 16-year-old self of where you are right now, the success you've had, the lessons you've learned, the hardships you've overcome? What are you telling your 16-year-old self?
Man, this is good, man. I think the first thing I'm telling myself is invest in Amazon.
Was Amazon even around then?
How do you think Amazon was around?
Yeah, I think they were getting started.
Yeah, it probably was getting started. But I think the first thing would be set your goals high. I mean, it's totally cool to fail, Kenny. Don't be afraid to fail. Don't be afraid of the word no, number 1. Number 2, it would be your family and your friends love you, but the advice that they give for you may not be in alignment with where you're going. So don't be afraid to go in that direction. But then the other thing would be, make sure that you take time to invest in yourself, you take caring of yourself, and you realize that those people who are closest to you, they love you, and it doesn't have to all be just about business, right? It can just be more so like this life is a journey. But the biggest thing is 100x whatever you're thinking. Like whatever your goal is, add 100 to it because it is possible. And realize that the law of attraction is real, your thought process is real, what you believe is real, the things that you have in your mind are going to come true. Just 100x it, and you'll make it happen.
That was a great answer. Thank you for that. So it's our last day on earth together. God forbid.
This is a good.
We're having our last meal. It's your choice. What are we eating together?
Our last day on earth?
It's our last meal, yeah. You and I are sitting at a table. What are we eating together?
I never even thought about this.
It's your choice. It could be anything. Remember, we're going to be gone anyway, so we can go crazy. We can eat any fried food you want. We could drink whatever we want. What are we eating?
We're going to have some lamb chops.
Okay.
Medium well.
Okay, I could do that.
So we're going to do a whole course.
Okay.
So
bring it on. I love it.
First course. First off, we're going to start with some old fashions.
Okay.
Right.
Cool.
Then after that, after we got the old fashioned, heck, we might as well have a cigar. Hey, it's the last thing. Then for an appetizer, hey, it's our last meal. Might as well go and get some char grilled oysters. Ideally, the way that they cook them at what's the name of that place in New Orleans? Drago's. Have some of those. And also some lobster bisque too, right? For the main course, we'll have some lamb chops, medium well, ideally grilled and smoked, grilled with the smoky taste. For the other two, we'll probably have some asparagus and au gratin potatoes. Okay. And then 2 or 3 old fashions later, we'll have a nice chocolate. What's the name? It's this place I go to called Houston's. They've got this really good.
Oh yeah, I love Houston's.
They've got this really good brownie
Uh-huh.
with the ice cream on top. We'll have that for dessert. And then we'll have another old fashioned.
Oh, God.
Right.
We might be dead right after we eat.
Probably will.
You're going to accelerate it for us. But that's cool. So in our I Own It studios, when you come down, you'll see we have a grand piano, a drum set, and 6 electric guitars behind me where I sit.
That's dope.
We could have anyone come in the studio. They could be living or deceased. It could be a band, a musician. It's your choice. Who would you have come into the studio with you and I to play us a song? And we've had some great selections over our shows so far.
Man.
Go ahead. Who would be the one you would choose? Anyone.
How many, this is one person?
It could be one. You could throw a second if you want. You can do a duet, you know.
Oh, man. Man, this is good, man. I've never even thought about this question. Prince.
Oh, my God. I would love to have Prince in studio.
And Whitney Houston.
And Prince could play the piano, too.
Yeah, Prince and Whitney Houston.
He was unbelievable on the piano. That would be great. We could have Prince playing the piano and Whitney singing.
Mm-hmm.
I would love that. That would be fantastic. Well, what is the best way to follow you?
You guys can follow me on Instagram. It's at Kenney, Kenney Conwell. And all my stuff right there, you'll be able to connect with me there. Also on YouTube, Mr. Money Savvy, and Facebook, Mr. Money Savvy. Now, we'll say this. For whatever reason, if you follow me on Instagram, you're going to get a fake page to follow you back. That's not me, right? Ignore the fake page, right? I got all kinds of fake pages. So I have one page at Kenney Conwell. You can connect with me there.
What about the company? Is there a website that people want to improve their credit, learn about credit? It's so important in life.
Absolutely. So if you're in the fixed stage, matter of fact, if you just go to MyMoneyEDU.com, so that's MyMoneyEDU.com, I'll be able to walk you through what needs to happen, whether you're on the personal side or the business side.
Thank you so much for sharing today. What a treat to have you on. Feel free to follow me on all social media platforms. Go to BenReinberg.com for more information about me. If you want to learn more about commercial real estate, go to AllianceCGC.com. That's AllianceCGC.com. We're going to be rolling out some great content and products to teach you how to learn how to invest in commercial real estate, so stay tuned for that. Kenney Conwell, thank you so much for coming on. You own it. That's why you're on the show. So thanks again. We appreciate it.
Thanks, man.
All right, we're out.
Thank you for listening to the I Own It podcast with Ben Reinberg. To hear our past episodes and connect with Ben, visit benreinberg.com.